Stocks extending yesterday's rally with new closing highs for the Dow and the S&P 500. But could earnings season derail the momentum? Well, joining us now is Drew Pettit. He is Director of U.S. Equity Strategy at Citi Research. Great to have you here. So, Drew, it's an expensive market. Will earnings justify that?
I think for now, yes. We heard Mike talk about this. We heard guests in your prior shows. We've heard Rick Reeder say it this week. Valuations make people uncomfortable, but earnings drives long-run direction, and we think we're in store for a pretty decent quarter.
So in particular, there's a high bar for software. I was just naming earlier some software names that really ran today. How does that factor in? Because tech in general is a really big piece of the S&P.
Yeah, it's funny. Software has the highest bar within tech. And it's not so much that the growth expectations are much higher than semis, for example. The difference is a lot of those names aren't monetizing and seeing the expected growth in the next 3 years that we think's priced in right now. So that makes us a little bit nervous. When you have that high bar, that's what creates volatility.
So guidance often plays a huge role in how the stocks move after earnings. How much does the current uncertainty in this environment, you think, impact that guidance, even including currency?
I think it gives companies an excuse that have pretty good fundamental trajectories. The stocks are up. People are talking about valuations. You can start to walk down some of those expectations for Q4. But before everyone freaks out that we're talking about cuts to Q4 numbers and potentially cuts to next year's guidance and estimates, that's normal. That's a very typical trend in U.S. markets.
Okay. So what mindset should investors have as we approach this earnings season? Financials are up first, and we normally put a good amount of attention on those, particularly the big banks, because they're the first out of the gate.
Yeah, look, I think people are going to focus on the consumer and the credit side there. But again, coming back to the banks and the value side of the market, we just started seeing broadening. Everyone's been talking about it. Everyone's been hoping for it. It's just happening now. Yeah, we might have a little bit of back and fill, but again, expectations are low. As long as we can keep, numbers kind of where they are for next year and for Q4, I think the banks do pretty good this quarter.
What kind of inflation commentary do you expect to hear, and in what way does that factor in as you're monitoring the length and breadth of earnings season to, the bullishness or lack thereof that we hear out of these executives?
So I'm curious who's going to have some pricing power into next year. Again, inflation's coming down. That's actually not good for some parts of the market for earnings growth. So think like staples. We think, rates down, inflation down. That should be good for defensive trades. No, inflation moving higher actually helped them move margins. So I'll be kind of curious who has pricing power, because when we're thinking about stock picking in a fully valued market, we're looking for companies that can expand margins, improve efficiency, expand ROE. So again, the pricing part of that's very important.
Barb Duran was just mentioning how previous natural disasters, hurricanes, have affected the economy overall for a couple of quarters. Should we look for commentary about that, either with regional companies or companies whose products tend to move through either Florida or the environment?
Look, it's going to be messy. Again, back to there's probably some excuses to help analysts and everyone kind of take down expectations. What we are seeing right now with the Fed entering a cutting cycle, it has got investors to look out beyond the quarter, beyond Q4, to think about 2025. So those companies that are talking about disrupted operations, what is going to happen after that? Investors get over those things. What is going to drive 2025? I think that'll matter more.
And 25, from all the broader signals that we have, doesn't look too bad, right? It's just that the market is at least fully valued.
Yeah, again, valuation versus momentum. Always a tough trade.
Indeed.